Welcome back. So glad that you could join us, and what we want to do now is go ahead and jump into the next video. But also I hope that you had an opportunity that we talked about last week, that you had a chance to do a little bit of research, that you sent us some questions that we were able to get back to you. So now what we'd like to do is get a little bit deeper, and what we want to do this time is first of all is just recap what we talked about last week. Last week we talked about a little bit about me. We talked about the client, what they look like. We talked about a sample program, and we talked about the tax codes. Now, what we want to do now is cover some of the most frequently asked questions that we get. And we have found that these are questions that we've accumulated over time in talking with investors. Who are we? Well, we are financial planners that work with high income earners for the purpose of helping them do some tax planning and helping them with their retirement planning and investment planning. So we've aligned ourselves with several strategic partners that helps us and brings a product to us that allows us to create the deduction we've been talking about. Now the company that we use the most is a company that's done over 60 programs over the last 10 years, and basically and primarily they are a land conservation company first, and then again from that we create some tax benefits. In 2015, this particular company that we do most of our business with, in 2015 alone, they raised over $20 million for land conservation easements. Again, that's the primary purpose that we're trying to do, is raise money, preserve property. But for that, and being able to do that, they were able to create through the tax codes over $82 million of deductions. One of the questions that we get a lot is, why have I never heard about this before? Not everyone qualifies for this program. One of the things that we have to do is make sure that you qualify. Well, if I told you about before, to qualify, we've got a couple of qualifiers. One, you have to have at least the last 2 years of income of $200,000 or greater, or $300,000 as a couple. Or you have to have a verifiable net worth of $1 million or greater. Again, it has to be verified by your CPA, your financial planner like myself, your attorney, someone like that, but again, excluding your home. The fourth point is that there is a limited amount of programs. In the programs that we have, we only bring out so many deals per year. And in those deals, when we're out, we're out. I use a scenario like around the corner for me is one of the best barbecue places you'll ever go eat, but he's only open on Friday and Saturday. But what he does, he comes out there in a week and sort of estimates how much food he has to smoke, and he either has it or he doesn't have it. So we've all learned, if we want barbecue, we don't go late on Saturday night because he's out of product. Same thing here. Most of these companies that we deal with come out and set out a limited number of product, and when you're out, we're out. Example, we thought we had enough product to last us all last year. Well, we ran out of product around the first or second week of December. We were out of product. So that's the other thing, is that we have it in here. The other thing that we have that we see is like, why hasn't my CPA ever mentioned this to me? Well, what happens is when we're talking with CPAs, this is what we usually find. That the CPAs will know about the program, and they will say, hey, I know about it, I've had some clients do it, I just don't know where to go to get any programs to introduce you to. So that's what we usually find. So what we have now is when you go back and talk with your CPA, you can tell them, hey, I found a supplier that I've checked out, I've looked at their appraiser, I looked at the CPA firm, the tax firm, and I looked at the tax law, so everything checks out. So that's one of the reasons. Now, does this also save money on my state taxes? The answer is yes. If you're in a state like Georgia, you are ended up with saving also not only federal but state tax. Example, I did one a few months ago. The gentleman lives in Texas, and naturally say there was no state tax savings. If I participate in a land conservation easement program, will I have a complicated tax return? No, not at all. Matter of fact, you do very little. Once you make your contribution, what happens now is you will end up around, probably the first or second week of March, you will end up getting what is called a K-1. Because remember, this property is inside of an LLC. You are a member of an LLC, so you will get your proportional tax deductions based off how many shares that you own in the LLC. Also, what you get is, and we think this is one of the best things that we do, and probably why we've had 10 years of no audits, is that you'll get, the last deal I did, we had about 125 pages from the appraiser. We send that to you also, which you also forward to your CPA, and they will attach that along or send that along with your tax return. Does this have the backing of the government? If you remember a few minutes ago, I just went through the tax codes, and hopefully you had a chance to get them or go research them, and you see that it is backed and all the deductions are verifiable. But what also that just happened in 2015, Republicans and Democrats went in and all voted to make permanent the 50% deduction of the adjusted gross income. So that just happened in December. Next one, what other benefits comes from a land conservation easement? What did I tell you that we do first? We are a land conservation easement program, and what we do is, if you are a member of any of our LLCs or deals, then what happens if you give us a call and you're going to be down in Lake Oconee and you want to ride over there and look at the lake, then you're allowed to do that, and there's kayaking and fishing, and so that's the kind of stuff that we can help you with. Will investing in a land conservation project increase my risk of audit? We've not found any statistics that say that. You are a high income earner, and so your percentages of audit are greater than others because of your high income earner. So we have nothing out there that says that this program causes you to have an audit. Now, if you all are audited and it has to do with our program, what we do off of each deal that we do is that we reserve a certain amount of money just for this purpose. As of right now, we've got over $900,000 in reserve that if they audit or have questions about the deal, not your personal audit, but about the deal, then our CPAs and attorneys get involved and will answer all the questions for IRS about the deal. When should I plan to make an investment? Well, like I said, in 2015, we ran out of product. In 2016, we usually have been coming out with our deals around August, last of August, 1st of September. Well, we decided this year, because of the demand we had last year and what we anticipate, we decided to come out with our first deal in June. It was an $8 million deal. Well, what we found was inside of 10 days, we had already funded half of it. A big CPA firm came in and wanted to take down the other $4 million for their clients that they would use over the next year with the planning. We decided not to do that, so we think this deal would probably close in the next month. But what happens as these deals come about and as the clock is moving toward December the 31st, you will find that the deals continue to go faster and faster. Now, again, it's sort of like my little story I told you about the barbecue. I don't know when we'll run out or when you're going to come in, but let me tell you a strategy that we've been using and that it kind of takes the worry out. Had a gentleman that was on commission, and he felt he'd make over $1 million this coming year. But up through like the 15th of May, he had received $600,000 to date on commission. So what we like to do is take you where you are, go ahead and fund for where you are, and then as time goes on, if he gets these other big commission checks, we will sit back down and take part of that and put it in another deal. And that way, we don't take the chance of him getting caught or without product at the end of the year. So, can I invest in a conservation project every year? So far for the years that I've done it, I would probably have about a 98% renewal rate of people doing it and renewing and doing it over and over because they're still out and working. And the only people that we've had not do the program again is someone who has retired and that does not have the income that they had before. Now, in here I need for you to do a little bit of homework for me because by now I've shown you how the deal is structured. I've shown you the tax codes. I've answered most of the questions. So what I want to do now is start making this thing a little bit more personal and get into some more of the numbers for you. So what I need for you to do is get your latest 1040 form. And what I want to do with that is go over it next week and show you how that we use that. Again, thank you for your time. I think you, hopefully that you're finding this to be of value to you. And then at the bottom of this again, click Ask Us Any Questions that you want, and then I'll see you here pretty soon, and then we will go over your 1040 form and how we use it. Thank you.